Thank you so much for joining us today. We will be starting in the next 5 minutes. Please don't hesitate if you have any questions at all, just to reach down into the chat box and send your questions, and we will get back to you within the next 24 hours. And if the same person sends in the same question, we will definitely go ahead and address that while we are in the webinar this afternoon. Thank you so much for joining us today. We're waiting on a few other attendees to go ahead and get on to be able to join us for the webinar today. So give us just a few more minutes and we will get started. And if you have any questions as we're going through the webinar today, please do not hesitate to ask your questions in the chat box and we'll be happy to answer your questions. Thank you so much for joining us for our The Power of Positive Credit webinar today. In just a few minutes, we'll be starting. During the webinar, if you have any questions at all, please don't hesitate to ask in the chat box, and we will get back with you within the next 24 hours. And if we get the same question in a couple of times, we will definitely go ahead and answer that question during the webinar today. Thank you so much for joining us today here at Oklahoma Central Credit Union with our webinar on the power of positive credit. We all look for different ways to be able to raise our credit score. We look for different ways that we can do things to contribute to our credit score. And one of the hard things is if we do not have credit or if we've made mistakes in the past with our credit, is trying to reestablish it. So we hope today we're able to answer some of your questions and give you some insight on how to build good credit and to continue keep growing good credit. If you have any questions at all during our broadcast today, please do not hesitate to ask a question in the chat box. We will get back with you within the next 24 hours. And if several people ask the same question, we will definitely go ahead and address that while we have the webinar going today. So the power of positive credit. So why should we care about our credit? Well, this is a big one that a lot of people don't realize nowadays, but employment. It can definitely affect your ability to be able to get a job, or there's even, for instances, after people have been hired, you may have something happen that does a big hiccup in your credit, and it can affect your job, depending on what kind of background checks you may have to have, security clearance you may have to have, bondability that you may have to be in. Those are different things that we want to think about. Also, we need to look at, we all know for renting a house, it can affect our credit, definitely for buying a home, and saving money. When we have a higher credit score, we're able to get a much lower interest rate on loans, and it can also affect the price of your car insurance. A lot of people don't realize what that entangles. However, if you were to ever notice with your car insurance that you may have a fluctuation of that it's going up or a decrease of that it's going down, and you know your credit scores came up, then your car insurance, different things like that should go down. But if you've noticed that you've had an issue with your credit and your credit score has fallen, that can be a reason why your car insurance has been raised. And also we want to look at, it can cost us on deposits. So having good credit helps us get those lower interest rates on our loans. It helps us obtain lower car insurance, and it can help us get higher interest rates when we're trying to save money and do things. We want to look at, we have three major credit bureaus that we deal with: Experian, TransUnion, and Equifax. Now, one of the important things to know is that not all financial institutions report to all three credit bureaus. A lot of places will just report to one credit bureau. Also, when we look at our credit report is going to be a different score and different credit on each credit bureau that we're looking at, because not everyone reports to the same credit bureaus. And another thing to keep in mind is, as we're trying to grow our credit, keep that credit going, having the higher credit scores in, if we have auto loans or signature loans with financial institutions, we want to make sure that they're actually reporting to the credit bureaus, because not all financial institutions do report to credit bureaus. Not all car dealerships report to the credit bureaus as well. So those are things, when we are paying on credit that we're using, we definitely want to make sure that the creditors that we're using are reporting to the credit bureaus so that our credit score is accurate. Now, what we want to look at too is to check your credit report and your credit scores. So through the credit bureau, you do get one free report each year that will show you your report and your scores. We also want to look at annual credit report. We can get those through different things of that Credit Karma that we may have, or depending on what financial institution you have, they may be able to have an app on there that has with that. Like I know here at Oklahoma Central, we offer that, so that our members are able to stay on top of exactly what their credit score is and what their credit is doing. It's very important too to look to see if there's something on our credit that we've not authorized. We want to make sure that we get those things taken care of. Identity theft is a big thing right now that goes on, and that's one of the first alarm bells that we have on that, is something new appearing on our credit report. So the Fair Credit Reporting Act, this is what employers can use in determining whether or not to hire someone. And if you're not hired because of something on your credit, they have to tell you what it is and give you a copy of that credit report so that you're able to dispute it. You do have access to your own credit report. A lot of people don't realize that. And you can dispute inaccuracies on your credit report. Also, we want to make sure that outdated information is completely removed from our credit report, and access to your file is limited. For instance, for an employer to be able to pull your credit report, they're going to be able to see what your credit report is, but they cannot see what your credit score is. So those are some of the things that we want to keep in mind as we're building credit or wanting to keep our good credit to keep climbing up in that number. Now, a lot of people will ask, how long will information actually stay on my credit? Well, positive information is going to remain indefinitely, which is what we want. Negative information, 7 years from when it was first reported. And how that works is let's say if you have a medical bill and it's been reported to your credit. Well, that credit company has actually, if they sell your debt, sell your medical bills that you may have, it doesn't mean that the new company that they sell it to, the debt starts over. They have to postmark it back to the date of when it started. They don't get to continue adding something new on your credit report each time that debt is sold if you have not paid it. So that's something to really pay attention to. If we have issues on our credit report of undue paid medical bills, things like that, you want to make sure that anytime your debt is being sold, that it's not being reported on your credit as a first new debt, because it's not. It actually goes back to when the first creditor charged it off. You also want to look at Chapter 7 bankruptcies reported for 10 years, and collection accounts will also stay on your credit for 7 years of the date of charge-off. And that's where I was talking about, like medical bills, things like that we may have. Each time the debt is sold, it's not new debt added to our credit, it's old debt that's being refreshed. So we want to make sure that we know that those dates of being charged off happen, so we're able to fight that if those inaccuracies start showing up on your credit report. We also want to look at credit scoring and what exactly is that made up. Well, a FICO credit score ranges from 300 to 850, and your score is based on several different factors. One of the largest factor of what we have, 35% of our credit score is made up of our payment history. So we want to make sure we're making those credit card payments on time, student loan payments on time, definitely paying our mortgage on time. And this is something a lot of people don't know, but if you have student loans and mortgage on your credit, those two things affect your credit the most. So we want to make sure that even if we only have the money to pay that minimum payment, that's what we're paying. The next big piece of our pie is amounts that are owed. And what we want to do is we want to keep that down to 30%. We don't want to max our credit cards out and owe 100% on them or 70% or 80%. We want to make it to where we're only using our credit cards 30% usage on that, so that we're not maxing them out or getting in over our head for it. Also, we want to look at the length of credit history. Not everyone's is going to be the same. Some people have had credit history started from the time they are 18. Some people don't even start building credit till they're in their 30s or 40s. So that's something too we need to look at, is from when was the first time that you actually applied for credit and started using it. That's 15% of your pie part. New credit is 10% of it. So if we're applying for new credit cards, we're getting a new vehicle, things like that. And also the other 10% then to make up our credit score is the types of credit we have, whether we have student loans, we may have a mortgage, we may have auto loans, we may have credit cards, signature loans, different things like that is what does make up part of our credit score. We also need to look at ways on to improve our score. We want to limit the number of open accounts. For instance, we all get several different credit card offers during the mail each week. If you're going to apply for a credit card, you want to make sure that you do your homework on which card it is that you want to apply for. And we want to make sure that we don't have a bunch of those card applications going out at the same time or even open, because that does affect our credit score. We definitely want to make sure that we're paying consistently, making those payments on time, even if it's only the minimum payment that we're allowed to make for whatever reason it is, make sure that we're paying those on time. We also want to look at do not transfer balances frequently. You want to make sure if you are going to transfer a credit card balance, we want to make sure, one, you're getting a much better rate than the rate that you have that you're transferring it from. And two, we want to look at if you have one of those credit cards that are, oh, we're going to give you 0% for the first 18 months. If we're going to transfer that balance, we want to make sure we can get that balance paid off within that time that's allotted so that it doesn't affect our credit anymore. And that way we're only paying on that balance. We definitely want to make sure this is where that 30% rule comes into effect to keep balances significantly lower than what our actual credit limit is. We want to look at repay old delinquencies. If you have things on your credit that are hindering you from possibly being able to get that auto loan or get that mortgage or get that credit card you're trying to get, we want to make sure that we're repaying our old delinquencies and that we're staying on top of that. We also, like I talked about in the first one, we want to limit the number of credit card applications that we've made. That's something that is new within the last 5 years with the credit bureaus, is that let's say you're shopping for a new car or you're shopping for a new home and you have your credit pulled at several different car dealerships, or you go to that car dealership where they talk about, we have this many dealers, we're not having any problem at all getting you financed. Well, they send out your application out to however many creditors that they may work with. When we are car shopping or home shopping and we're having things like that pulled on our credit, they can tell whether it's coming from a mortgage or it's coming because we're auto shopping, and they will take all of those pulls that you've had within 30 days and lump them into one so that it doesn't affect your credit scores having it pulled 20 times when you're just looking to be financed for an auto loan or for a car. And another thing that's important too, if you decide that you are going to go do something like that, check with your financial institution first to see what they may have so that your credit is only pulled one time. Now, this is where we talk about disputing inaccuracies on our credit report. So what we want to do is we want to write a letter requesting an investigation, not a letter of to whom it may concern, this is not my debt. We need to go into detail on this with, this is not my debt because I never even lived in this state at this time, or I've never done business with this company, just a number of different things. And we want to make sure that we have some facts to be able to back up what we're disputing, whether it may be this isn't me because of these reasons, or I've never lived here, different things like that. I've never even been to this facility before. Those are things we're going to look at. We want to use a 100-word statement and explain in detail why we are disputing these inaccuracies. And while we have the inaccuracies being disputed, they will be removed from your credit during that time. However, if the creditor is able to prove that it is you and that is your debt, that debt will go back on your credit report. So that's something to really remember and to pay close attention to when we're disputing things on our credit. We also want to look at that we want to make sure if we're mailing anything, we're sending it certified mail. We want to keep copies of everything. If we're doing it online, disputing the inaccuracies that it may have, just keep copies of everything that you're sending to the credit bureaus. And just because you send it to one credit bureau doesn't mean it gets sent to all the other two. So you need to do a report for each credit bureau, not just one. Again, if you have any questions, please do not hesitate to ask in the chat box. We'll be happy to answer those for you. We also want to look at on beware of credit repair. Credit repair companies cannot legally do anything that you cannot do yourself for free. That's something too we really want to stress, that all it is fixing the inaccuracies on your credit, making sure that everything is up to date on your credit. You can take steps yourself to dispute anything that's incorrect or outdated information instead of paying a company to be able to do what you are able to do. Now, we have included here a copy of a credit report, just so if you've never seen one, this breaks it down in detail. So if you're having to dispute anything on your credit, or you're just curious as to what is on your credit, you have a copy of something to be able to list in detail what everything is and how your credit report should read. Because for a lot of us, if we don't have access to this, we have no idea what the credit report is even stating. So we want to make sure that we're paying attention to those things. Now, where it talks about trade lines on there, the creditor's name, and it will have partial account number, date of last activity, those types of different things, we want to make sure that those are accurate, that our balances are being reported accurately, that if it's a joint or an individual account that it's being reported, and our current status is on it. Now, sometimes our credit limits are reported to the credit bureau. It just depends on that financial institution, or it depends upon that creditor, how it is that they use things to report to the credit bureaus. Now, identity theft, that's a big thing. That's why we want to really make sure we're paying attention to our credit report and monitoring it, because like I said in the beginning, if we have identity theft take place, it is going to show up on our credit report first. So we want to make sure that we're keeping up with what's going on with our credit report and the different things that are being reported. Also, we want to be careful on, excuse me, who we share our information with, our account numbers, social security number, things like that. We want to make sure that we're reviewing our credit report at least a couple of times a year, if not once a year, just to make sure everything's current on it. And also monitor your statements on our credit card statements that we may get. If you start getting new statements in the mail, looking through it to make sure that someone's not using your information. Also, we need to look at damage control on what can be done if we are a victim of identity theft. Well, we definitely need to fill out a police report, contact all 3 credit bureaus, and you want to contact all of your creditors, your financial institutions. You also need to contact the DMV, the Social Security office. And this is something a lot of people don't know. For instance, if you are a victim of identity theft and whoever it is that has your information gets pulled over, they can just supply your name and social security number, and that's what the ticket gets issued under. So if we know if you don't get pulled over, of course you're not going to pay a ticket you weren't aware of getting. So we really want to pay attention to things of what's going on with our credit to be able to tell if we have been a victim of identity theft. We want to monitor those accounts and review our credit report quarterly if possible. Other types of reports too that we need to look into is check systems. And this is when used when opening a new checking account, and it tracks return checks. And check systems is the credit bureau that financial institutions use to talk to each other about, has an account became overdrawn? Was there activity on these accounts that was not supposed to be going on? Those are things that financial institutions will report to check systems. So you really want to stay on top of those. If you're overdrawing your account, you want to try to do that as little as possible. If we have to close out an account because it's overdrawn, we want to make sure that we get those accounts paid back off so that we'll be able to open an account somewhere else. Also, another type of credit report that a lot of people do not realize about is the National Tenant Network. And that's where if you rent a home or an apartment from an individual and not a company, it's used by landlords. We report on those people that do not pay their rent on time, people that have broken leases, that have possibly destroyed property while moving out. So just because you're not renting from a large corporation does not mean the individuals do not have tools and resources to be able to use to report this so that other landlords can know. So we want to make sure that we're paying our rent on time and taking care of things, evictions, different things like that, so that those don't hinder us from being able to move where we're wanting to get to move to. Now we're at the end of our webinar for Better Credit today. Knowledge is power. We do better when we know better. Obtaining a higher credit score is definitely within your reach. So please don't hesitate at all if you have any questions about the webinar, anything that we touched base on today. And also on our YouTube channel for Oklahoma Central Credit Union, we do have our past webinars on there. And within the next 2 weeks, we will also have this webinar uploaded as well. And we also have different webinar and blog information on our website as well that you please feel free to get on and look and be able to answer any questions we may be able to. And thank you for joining us for our webinar today.